Welcome, everybody. Welcome to the first of series of webinars hosted by the CSU System-Wide HR at the Chancellor's Office. On the screen, you should see 2022 scheduled webinars. Today, Fidelity is joining us. As you all know, Fidelity is our CSU 403B Supplemental Retirement Plan record keeper. The 403B plan is an excellent way to save on your taxes today, while also saving for your retirement. Fidelity has been our record keeper since 2016 and have been helping our employees in their journey to prepare for retirement. Today, we'll be joined by Christian Frost and Julie Markson from Fidelity Workplace Consulting. They're here to talk about getting started and saving for retirement. With that, I'll give it to Christian to introduce himself.
Thank you, Bashoy. And again, my name is Christian Frost. I've been with Fidelity 11 years now. I'm one of the certified financial planners that works at Fidelity, and my title is a workplace financial consultant. I've been supporting the CSU retirement plan for a little over 3 years now. And as a workplace financial consultant, primarily I speak with individuals to help them with planning for their retirement goals, understanding the benefits of the CSU 403B plan, and all that it has to offer as it relates to savings rates, investment strategies. But it's not just that. If you have other financial goals, we want to help you with your overall financial wellness. So whether it's paying down debt or looking for additional ways to save, Fidelity's here to help you out and support you. So that's a little bit about me. I'll be presenting today's material today, but I'm going to turn it over to my colleague, Julie, to give her a chance to introduce herself and share with you how to schedule an appointment with one of us.
Thank you, Christian. Thank you, everybody, for joining us here today. Again, my name is Julie Markson, Fidelity Workplace Financial Consultant. I'm also a certified financial planner. I've been with Fidelity a little over 5 years now, and I work with participants such as yourselves, helping you best utilize the CSU plan and all that it has to offer within the retirement 403B. And I also help you with holistic financial and retirement planning, anything that's concerning finances, investments. I'm more than happy to help guide you in the right direction. And what I'm going to do right now is I'm going to share my screen and show you how you would be able to schedule an appointment with myself and my colleague, Kristen, and a couple of the other consultants helping out on the CSU plan. So hopefully all of you see what we call the CSU microsite. And the way that you can get to this website is by opening up any web page and typing in netbenefits.com/CalState. It'll take you directly to this page, and you can schedule a one-on-one appointment with us by clicking on the button here that says Meet with Us. All right. Once this loads, you'd be able to scroll down on the page, see all of the planners that are available for you that you can schedule an appointment with. And you would actually click on the hyperlink here that says schedule a phone appointment. Right now, we are currently meeting with participants on a phone or a virtual basis. So when you click on schedule a phone appointment, you would be taken to this page here. The California State University is already populated into the search function. And when you would select an appointment type, you'd have the ability for virtual or phone. Okay, and then you would choose a date. You'd see all of our available dates and the number of spots that we have available for you. And with that, I think I'll hand it on over back to Christian.
Yeah, thank you, Julie. Thank you. And I'm going to go ahead and share my screen now, and we will jump into today's workshop. So hopefully everyone can see my screen currently. Today's workshop and education series will be about getting started and save for the future you. So again, thank you for everyone for attending. You've taken the first step and making sure you're taking full advantage of the CSU retirement benefit and some of the benefits that CSU has offered you. Today, you'll learn about the advantages of enrolling in your CSU 403B, the supplemental retirement plan. We will walk through the steps you will need to take in order to make the money that you work very hard for work hard for you as well. So we'll be discussing the 403B benefit. A lot of people have questions. What is a 403B, a 401k, all these different retirement accounts? Essentially, it is an account to be able to save in. It has tax advantages in order to provide you with income for the future. So you can keep up a certain lifestyle once you choose to retire. 403B is usually what not-for-profits tend to set up, universities and other institutions, whereas 401k is usually what for-profits set up, but they're very interchangeable. So on today's agenda, we'll be discussing, number one, how the 403B can help you reach your retirement saving goal. 2, how much you should contribute. Different ways to manage and invest the money that you saved, and some next steps, right? What steps should you take in order to get started? So that's what we'll be discussing today on today's agenda. We'll take about 35 to 40 minutes in order to cover these topics, and then we'll have some questions that get answered following. All right, so why should you save in your workplace savings plan? What about your workplace savings plan makes it a great way for you to save for your future? Well, high level, there's 3 big benefits. Number 1, convenience. The second are tax advantages. And thirdly, compounding growth potential. So those are the 3 big benefits and reasons to contribute and saving for retirement. Let's talk about those a little bit more. 1, the convenience. So if you choose to enroll in the CSU 403B plan and you do the enrollment process online with Fidelity, and we'll talk about what that looks like a bit later. But once you enroll, the money is taken directly out of your paycheck. So it's very simple and easy with payroll deductions. With the CSU 403B, you will pick a flat dollar amount when you choose to contribute. Now, the other second reason to contribute outside of the convenience are the tax advantages. So some employers, including CSU, the fact that they have a great retirement plan and a great benefit, it has some flexibility on how you can save. So when you put money into the CSU 403B, you're going to pick a dollar amount that you want to contribute out of each paycheck, and you're going to have an option of saving either pre-tax, which is commonly referred to, you'll see pre-tax, before tax. You'll also see it sometimes referred to as traditional. They're all the same thing. And actually, when you roll the CSU plan, when you set it up, it says salary reduction. So essentially, when you do that, you are reducing the salary that, let's say, you're claiming at the end of the year. So the money is going into the account before taxes. And therefore, when you take the money, and we'll get into that a little bit more, but it has some tax advantages of lowering your taxable income now. You also have the ability to save Roth. So when you save in the CSU plan, there also is the option of Roth. Roth is commonly referred to as after tax. You need to keep in mind, a Roth IRA, people hear that term a lot, is different than saving Roth under your 403B. It does have the same tax advantages that we'll discuss in just a moment, but Roth IRAs have different rules around how much you can contribute and how the money goes in. So think of it as we are referring to pre-tax and or Roth money going into the CSU 403B. So let's talk a little bit more about pre-tax. If a CSU employee chooses to contribute pre-tax to their 403B, those contributions are made before taxes are paid. So ultimately, in that scenario, let's say an individual makes $50,000 a year, they contribute $5,000 over the course of the year is pre-tax. During tax time, their taxable income is only $45,000. So they get to lower their taxable income. It'll also, you'll have a little bit more in your take-home pay compared to, if you were to have claimed all that money as income. So it doesn't hurt your, let's say, your take-home pay or paycheck as much when you do pre-tax. So it helps to provide you with more of a tax benefit now. The money comes directly out of your paycheck. And those contributions, though, so let's say that individual saves $5,000 and they wait until retirement age to take the money out. And we'll get into what that means a little bit later, but let's say they wait and at what age that is. But if they choose to take the money out at retirement, they will then pay taxes on what they contributed, as well as any earnings at whatever tax rate they fall into in retirement. So essentially, if you think about pre-tax or salary reduction when you're contributing to the 403B, you're saying more, hey, I'm going to avoid taxes now, and I'm going to pay the taxes as I pull the money out in retirement. But the big thing is, a lot of people come to me during tax time. They say, wow, last year I got hit with a pretty big tax bill. And my tax advisor said, hey, do I have an employer plan that I contribute to in order to lower the amount of income I'm paying and pay less in taxes? And the 403B is a great vehicle in order to do that. Now, on the flip side, you have the ability to save Roth. And so when you save Roth under the CSU 403B, it's commonly referred to as after tax. So if you contribute after tax to the CSU 403B, you are going to pay the taxes on the money now. So think of it as, instead of the money going to your checking or savings account, it's going into this Roth account, but it has the same tax impact in the sense you're claiming it as income now, so you're paying more in taxes than you would have if you saved pre-tax. Come directly out of your paycheck. You make the elections with Fidelity, and we contact payroll, and ultimately they send us the money after tax. And behind the scenes, and you can actually see it when you log into your account, but Fidelity will track what you contributed Roth, and when you're ready to take the money out, the earnings can be taken out tax-free. So if you think about Roth, it's after tax, you're paying taxes on the money now, claiming it as income now, and you're paying taxes on those, and you get to take the earnings out tax-free. So you get to avoid taxes as you pull the money out in retirement. Now you'll see down here on the left corner, should I say, bottom left corner of the screen, Roth contributions to take the money out tax-free, the earnings, you have to hit two requirements. Your first Roth contribution needed to happen at least 5 years prior to the withdrawal, and you must be age 59 and a half. So those are the rules you have to remember as it relates to taking Roth earnings out tax-free. The money that you put in, you've already paid taxes on, you would never get double taxed, but the earnings, you have to wait until 5 years and 59 and a half for these earnings to be taken out tax-free. So then we get the question all the time, which to choose? First and foremost, everybody's situation is different. A lot of people always think one way is better than the other, and that's not true. Everybody's situation is different, and it's important to think about that. We'll talk about generally speaking. The answer is taxes. You should choose whichever option which results in the least amount of taxes being paid. So is your tax rate going to be lower now when you're saving the dollars, or will it be lower in retirement? So people that typically choose Roth are going to be individuals that probably have a lot of time until retirement. So a longer time horizon for the money to grow tax-free. And also maybe they're in a relatively low tax rate. So they'd rather pay the taxes at that low rate in the assumption that maybe in retirement, their tax rate could be higher. Maybe they're thinking that they'll earn a lot more in the future or in retirement. The fact that you are CSU employees, this is a supplemental retirement plan. You will have other additional income sources if you work long enough for the system. You'll have Social Security that you pay into, as well as the CalPERS pension. We're not going to get into the pension as much, but that's a monthly benefit that you get for life. This is in order to kind of supplement that. That's why it's labeled as that. So if some people think, hey, my income might not drop off as much in retirement, or maybe it's going to be the same or if not higher, and my tax rate effectively would be as well, then that's where they would save Roth. Now, if someone says, hey, and I would say this is probably more times than not what I tend to see, is people maybe are thinking in retirement, their tax rate might be lower. Maybe they don't have dependents. They have less expenses. They don't carry a mortgage. So for various reasons, maybe they needed $100,000 to live off of while working, but in retirement, maybe they only need $60,000. And so when they look at their taxable income in retirement, it can potentially be lower. So it would have been better in that scenario to avoid the taxes, saving pre-tax, and pay them at retirement at a relatively lower tax rate. Everybody's situation is different. That's generally speaking. We always suggest, consulting and speaking with the tax advisor, as well as schedule some time to speak with us so we can talk about your overall financial situation. But that's one thing very important to think about. It's great that the CSU plan has lots of options, saving pre-tax versus Roth, but it is important to evaluate your situation. And also you have the ability to save both and mix and match. So it's not all one way versus another. Some individuals choose to say, hey, I want to save $100 pre-tax and $100 Roth out of each paycheck. you can do that as long as you don't hit the overall IRS limit. We'll get into the limits in a few additional slides later. So the third reason to contribute outside of convenience, tax advantages, are going to be the compounding growth potential. And this is essentially when you choose to put the money into the account, it's very important to pick the right investments and a good investment strategy. And most investments are going to be tied to stocks and bonds. We'll get into that a little bit more. But many times those stock and bond investments will generate dividends or interest, or they'll have gains where they become higher valued. And in those cases, when you have dividends or interest, kind of like interest, maybe you get into a savings account, generally, those are used in order to purchase additional shares of your investment. So usually those dividends are what we describe as reinvested, and they can buy additional shares. And because those additional shares are purchased with earnings, it allows for more growth potential. And essentially, the longer the money is in the account, the more growth potential that you're going to have. So the higher dollar amounts and the longer the money you leave that money invest in saving is generally going to result to higher account earnings and higher values, so you can keep up a certain lifestyle and use these funds in retirement. So that's the third reason, is the compounding growth potential. So, in summary, we've discussed the benefits of the 403b, the fact that it's convenient. You can actually save a lot, which we'll get into. It comes directly out of your paycheck. You have a pre-tax and a Roth feature within the CSU 403b, as well as the compounding growth potential. You don't pay any taxes on the way while this money is invested in growing dividends, interest, any kind of gains you don't have to pay taxes on. Those are all three major advantages of saving under the CSU 403b. So now let's talk about, once you enroll, what are some other steps that you're going to take? It's very simple and easy to enroll. I'm going to show you the website a little bit later following the presentation. But once you do so, you're going to create a username, a password. The website is netbenefits.com. But you create a username, a password in order to view your account at any time. You don't want to reuse passwords, avoid weak passwords, use certain phrases. So, but let's say, for example, that you have another account. I get this question a lot. I have accounts from other employers that used Fidelity. Maybe I have a personal account that I've created with Fidelity. Do I have to create a whole new account? Yes, you need to create a whole new account. The CSU 403b is specific to the CSU plan, but there's no additional usernames or passwords that you have to remember. So when you're creating the account with CSU, which we'll go through, once you put in your social security number, it will then identify that you have another account with Fidelity. It's going to prompt you to log in. Then once you open the CSU 403b, you'll see all of your accounts show up online on Fidelity's site. So it does make it simple and easy in that sense. But if you had another employer plan, you can't just start contributing to that one directly out of the CSU. You do need to create the CSU 403b. And then once you've created the account, you've enrolled, set your contributions, investments, which we'll talk about a bit more. The big thing is you need to make sure that you name your beneficiaries. This is the final step of the enrollment process, but we've strategically put this in the middle because we don't want you to forget this. It's very important to name your beneficiaries. Naming beneficiaries on other benefits through CSU, whether it's life insurance or anything along those lines, that does not carry over to the CSU 403b. So very important to go online. That's the easiest way to do it, and set up your primary beneficiaries. So if something were to happen to you, who you want those assets to go to, as well as contingent. Just in case the event were to happen, for something happened to you and that primary beneficiary, it's important to have contingents, which are essentially secondaries. So we're going to make sure that you name your beneficiaries. I'll share with you a quick story. I started in one of our phone sites in Cincinnati, Ohio. Actually, it's in Covington, Kentucky, but I'm from Cincinnati, Ohio. Go Bengals. I know it's tough Sunday, but from that standpoint, I started one of our phone sites, and we had a woman who called in. She had a 401k. I was working on the 401k side, the for-profit side of Fidelity at the time. And she asked me, or she told me, hey, I need to update my beneficiaries. So I said, okay. I asked her a couple security questions, got her verified. And then she said, oh, can you tell me who my beneficiary is? And she said, I recently went through a divorce, so I need to update my beneficiary. I said, okay. And I told her who it was. And she said, wow, that's not my ex-husband. That's my husband prior to that. And that's who would have had claim to those assets. And then you're tied up in the courts and other things. So very important, you make sure that your benefits get distributed according to your wishes and who you want to give them to. So if there's life changes, a marriage, a divorce, a child, death in the family, anything along those lines, I know it can be a lot to deal with at that time, but try to keep it in your mind that it's very important to make sure that your beneficiaries are up to date on all of your accounts, whether it's Fidelity or outside of that. Very important from an estate planning perspective. And these are very tax efficient. So if something were to happen to you, these accounts get distributed directly to those beneficiaries, no taxable consequences on the transfer. And then those beneficiaries, depending on their status, have the ability to take that money out. And they would claim that money as income if it's pre-taxed or Roth. They wouldn't have to pay any taxes on it. But the transfer is actually no taxes, no probate, so very tax efficient when you name the beneficiaries. All right. So let's say you enrolled, you created the account, and now you're thinking, how much should you save? Well, Fidelity has a rule of thumb of how much you should aim to save. First and foremost, everybody's situation is different, and we're going to get into some strategies in order to help you if you can't start here. But Fidelity suggests saving 15% of your for retirement. Now that 15% is between you as well as any employer contributions. Now CSU and the state does not contribute to the 403B. This is a completely voluntary plan. The state is contributing a pretty significant amount to go into the CalPERS pension. And you contribute into the pension. So that's what we try to think about. If you're hired after 2013, you're going to be contributing, I believe, about a little over 7% to the CalPERS pension. But if you don't stay long enough working with the system, you get to keep the money you put in. But any of the state's contributions or what that benefit can be, if you're not fully vested, then ultimately, you wouldn't necessarily receive as much as you would if you continue working longer for the state. So that's why we think it's a good idea, number one, to start saving early in the supplemental plan and to try and target, if you can, make up that other 15% that we're trying to make up the full 15%. So if you're putting about 7% in the CalPERS pension, which is automatic and mandatory in that example, maybe you try to do, around 8% of your paying into the CSU 403B. So that's kind of what to target. Now I will say, I've seen CSU employees, if they put in, 30 plus years in the system, they've got Social Security, many times they're going to be in a pretty good spot financially, even without putting money in the 403B, but we still think it's a great idea in order to start saving early and often and to give yourself that financial flexibility that, if you don't want to work as long or, you want to travel or whatever it might be in retirement, that you have the ability to do so. We want you to be working long because you want to, not necessarily because, you have to or you're forced to. So I think it's very important to make sure you're thinking about that. So 15% is the targeted rate. And I would say if you're putting at least, maybe 7% in the CalPERS pension, maybe targeting somewhere around 8%. Fidelity has calculators and such online to help you out with figuring out, how much that might be of your overall paycheck. So I'll show you a couple calculators as well later on. Now, 8% can be a pretty significant amount, especially given the fact that people have other financial goals. We're in California, I'm in Southern California, one of the most heavily taxed states in the country, high cost as it relates to housing and everything as it relates to that. So we understand that people have other financial obligations, goals, saving for a home purchase or whatever it might be. So we think whether it's $10 or $100, start seeing what you can start with and build upon it. And it's actually, the CSU plan's a minimum of $15 a month. That's the minimum. So even if you can get started at $15 a month, get started. Start saving early, doing it consistently, and increasing it where you can. Hey, if you get a little bit of a pay bump, after a year, good idea to go in and say, hey, can I put an extra 1% into my account? Because you won't regret it. I can count. I don't think I've ever heard anyone say, oh, I wish I didn't save as much for retirement. It's very rare that I get that. Now, I'd say probably once a day or, a couple times a week, I hear someone say, I wish I would have started saving earlier, or I wish I would have saved more. Or I talked to people that did start saving, but they had the CSU system, but just started saving late. And they're like, oh, I wish I would have just started a little earlier, you know, $10 or $50 a month. You know, I don't even think about it. I wouldn't even have felt it, but it would have made a big difference in the long run. So, and that's that compounding growth potential. So very important, targeting around 15% if you can. It's about maybe 8% or so into the CSU 403B, in addition to what you're already putting into the CalPERS pension. And even if you can't do that, starting at what you can, you know, you can do as little as $15 a month, but get started early. I'll share with you another story. I saw an article and it had an individual two individuals, one started saving at age 25. They saved fairly significant amount, but it's about $466 a month. They did it for 10 years. So they saved about $50,000 over those 10 years. Had another individual that started saving, and then it gave you an example of someone that started saving 10 years later at age 35 and saved until 67. So they saved 32 years. And in those situations, the individual, and they saved the same $416 a month. By age 67, the person that started saving 10 years earlier but stopped, they only saved for 10 years, didn't save after that, had more money in the account than the individual that started saving later, assuming the same rate of return and such. So it's just that compounding growth potential of starting to save early and often, even if it's small amounts, will make a huge difference in the long run. So now we're going to get into some plan specifics of the CSU 403B. Number one, I want to if you guys can, you know, maybe just take I know a lot of you are maybe on your computers or whatever it is, or if you're on your phone, take a quick screenshot of this. This is great because it has the website that you can go to enroll, netbenefits.com/Cal State. So that's at the bottom on the right. You'll also see the plan ID. If you log in, you don't have to put a plan ID in if you go directly through the site that Julie showed you earlier. But if you go to this other site, you have to put in a plan ID. So if everyone just wants to take a screenshot of that, very easy. As I said, you'll be able to find this later on. But as it relates to contributions, so this is a 403B. The CSU 403B allows you to save this year as little as $15 a month, and the limit is up to $20,500 over the course of the year. So that's the full amount that you're allowed to contribute over the course of the year. So it's a pretty significant amount. That's the other benefit of the CSU 403B. You can save a lot. And this is regardless of your income. There's no income limits. And that $20,500, and that's if you're under the age of 50. The catch-up limit is if you're over the age of 50 is an additional $6,500. So that's about $27,000 that you're actually able to contribute if you're age 50 or older. So under 50, $20,500, 50 or older, $27,000 for this year. These do change from year to year. So it was lower in 2021. They adjusted, you know, due to inflation and such, but these can change from year to year. When you contribute, you can do as little as $15. You can do pre-tax, you can do Roth, and that $20,500 limit is a combination. So we get that all the time. People will say, you know, hey, I thought there was a cap on how much I can contribute Roth. There is on the Roth IRA, and it's a lot lower. Putting money into your CSU 403B, you could do up to, you know, you could do the full $20,500 of your salary as Roth if you wanted to. Or you can mix and match, 10,000 pre-tax, 10,500 Roth. It's up to you. You make those contributions when you enroll. You can change the contributions all online, so you don't go through benefits to do this. You open the account with Fidelity, you pick your contribution amount with Fidelity, you pick your investments with Fidelity, you'll set up your beneficiaries with Fidelity. There's also a little bit of a special catch-up. So if you work for the CSU system for 15 years or more, you have the ability to contribute an additional catch-up amount if you've under-contributed to the plan. So there's some details there. We can get into that a little bit later on. other plan features when you are contributing. Well, a few things. One, it's vested. There's vesting, and that essentially means, do you get to keep the money? Yes. Anything you put in, your contributions, you're always 100% vested. Sometimes with certain employers, you have to stay there a certain amount of years to keep the benefit. This is fully vested because it's all your dollars that you contribute. The CSU 403B does have some loans, even though it's intended for the future. You do have the ability to borrow against your account for certain reasons, as well as once you reach if you have separated from CSU, or if you retire, you're 59 and a half, or you become disabled, or have severe financial hardship, there are some withdrawals available. But generally withdrawals, there's, like I said, certain requirements. Most times it's going to be either 59 and a half or separation from employment, where you can potentially withdraw the money. And we'll get into that a little bit later. So once you contribute, so we talked about enrolling, opening the account, picking how much you want to save. The next big thing is, how do you want to invest those dollars? And we have lots of features and lots of strategies. CSU's constructed a great plan that has great options depending on you as let's say, an investor. So there's two different approaches. One is professional investment help, and the other one is what we describe as more so do it yourself. Okay. So if we're thinking about that, I want everyone to kind of think about this to themselves. How many people have maybe accounts with other institutions, other retirement accounts, or even have their own CSU 403B and have certain investments? And how many of them chose their own investments? Now, if you chose your own investments, did you do it or did someone else help you? Because that tends to be, a big question. And then even if you do it, do you remember why you picked the investments? How did you pick them? What was your strategy? I think these are all very important things to consider. And I say most individuals that I would speak with aren't very comfortable with picking out their own investments. Maybe they don't have the time, the desire, the knowledge. There could be lots of different scenarios, and they need professional investment help. And there are some people that feel very comfortable picking out their investments. They're looking at the markets, they've taken some classes, and they feel comfortable doing it themselves. And that's completely fine as well. The CSU plan has a great setup of investment options that we'll show you at the end. That's going to show you the various different investment options. But we'll speak to some different strategies depending on whatever approach you're looking to take. Now, to start, we're going to start with someone that needs investment help. If you're looking for investment help, once you enroll in the plan, so you create your account, you click on enroll, you pick the dollar amount, pre-tax or Roth, you're going to get to a place that says, how do you want to invest your money? Choose your investments. And on the two left options are going to say target date funds, which is what we would describe as a single fund solution. And then you would see an option that says a managed account. So let's talk about the single fund solution. The single fund solution is, like I said, commonly referred to as a target date fund. CSU has hand selected the Vanguard target date funds as the investment options for their plan. And you'll see that, and these are very common in retirement plans. It's been years since I've run into a retirement plan that doesn't have a single fund solution. And it's because they're a great strategy. It makes sure that someone is invested appropriately for their goal. And with a target date fund or a single fund solution, you'll see that typically they have a number at the end. So the CSU plan has the Vanguard target, and they'll say 2005 or 2010 or 2040 or 2050. That is referring to the year in which it's designed for someone's hoping to retire. So most times people are going to pick the one aligned with the age they turn 65. It's not always the case. If you pick something that's a little closer, that's going to be a little more conservative. The one that's a little farther away, a little more aggressive. So let's say, for example, I'm 33 years old, hoping to retire at 65. Now that's 22 years from now. That's going to be around the year 2045. So in that case, I could simply pick the Vanguard Target 2045, and that's where my dollars would be contributed to go into. And then ultimately, Vanguard is going to pick a mix of stocks and bonds in order that's going to be appropriate to help me with reaching that goal. And so let's talk a little bit about stocks and bonds. Generally, it is very important, and actually what's going to provide you with the compounding growth potential and the ability to pay for the things in the future is going to be, you're going to need to get growth. We have to think about trying to pay for things 30 years down the line, or 10 or 20, whatever the time frame is. And odds are, as we've seen it firsthand, things are going to get more expensive, right? We've seen inflation at a very high level in the past year, right? Gas prices have gone up a lot. To travel, Amazon Prime just raised their prices. So everything's going up, right? And we need to be able to pay for those things 20, 30 years down the line. You can't just put your money in a savings account and think you're going to be able to pay for that same thing 30, 40 years down the line. $1 today is not worth $1 tomorrow. And so we're not just suggesting that you invest the money in order to get growth and be greedy. It's because it's really necessary. Now, it's very difficult to be able to fund a lifestyle in retirement without having some growth along the way on your dollars to be able to outpace inflation and the rising cost of everything else. So stocks tend to be more aggressive. They're essentially ownership in a company. Bonds tend to be a little more conservative. It's a form of debt. You're lending money to institutions and they're paying, essentially they're agreeing to pay that money back over time with interest. So when you're investing in bonds or fixed income investments, that's what you tend to see. And then finally, there's cash. Yeah, so stocks, bonds, and cash. And so we think it's very important. We use what we describe as asset allocation, which is picking out the appropriate mix of stocks, bonds, and cash based upon your time frame, your goals, and when you plan on using the money. So that's what you'll tend to see when it comes to an investment, let's say, approach and strategy, is thinking about what's the appropriate amount of risk and what investments are going to fit well in that. So if you go with the target date fund, ultimately it's all kind of done for you. You don't have to pick out the investments. There's already a hand and pre-selected mix of stocks, bonds, and cash. There's also a managed account option that you have available. So that's Fidelity's personalized planning and advice, where we ask you some questions, understand your retirement age, savings, income sources in retirement, and how you feel about risk, and we can build a portfolio a little more tailored to you using the CSU selection and menu of investment options. So there's both options, whether you want to go with target date funds, make it simple and easy and just based on an age and you pick that, or there's the Fidelity personalized planning and advice, which is a little more tailored to your situation. But for this service, there is a small fee. And then finally, if you wanted to do it yourself, and if we already manage it, we create an investment strategy based on your situation. We're going to pick all the investments. We're going to keep you on track with updates on changes in the market or in your plan. So it is really a little bit more of a partnership and a little bit more of a hands-on approach when it comes to Fidelity managing that, if you go with that Fidelity personalized planning and advice strategy. And then finally, if you want to do it yourself, we have the ability to do it. There's tools that are available to help you with picking out your investments. There's planning tools to help you with planning for retirement. Myself and Julie constantly are running retirement analysis to help people with projections and forecasting for retirement. If you can gather your CalPERS pension, bring that to the table along with how else you save. We can help you with planning for your financial goals. So you've got lots of tools and resources to help you with your investment strategy as well as your overall financial goals. And then also there's an option which is a brokerage link. So brokerage link is where if someone wants more investment options than the CSU 403B offering, then they're going to open brokerage link. It's attached to their CSU 403B. They put money in the 403B, they shift it into brokerage link, and allows them to invest in more options. They have over 200 Fidelity funds and thousands of, I think about a bit over 2,000 non-Fidelity funds that you can pick from as well that are part of our no transaction fee network. So it's not everything, but it's just Fidelity funds and some non-Fidelity funds that you can available through the brokerage link. But your plan doesn't monitor those investments. So you're kind of on your own. You're responsible for making sure the investments you select are consistent with your particular situation. Fidelity doesn't really suggest, give you suggestions on the brokerage link, nor does your plan review the options that are available on the brokerage link. but it does give you a little bit more of an expanded investment offering. All right, so we're just wrapping up here. We've discussed number one, why you should put money away and the benefits of using the 403B. We looked at how much you should be saving. Hopefully you understand why it's important to start saving and the benefits of saving early. And finally, we've discussed how you might want to invest your savings. So what's the next steps? Number one, you can enroll in your plan. You can do that through the site I'm going to share with you in just a moment. It's netbenefits.com/Cal State. You can also give Fidelity a call if you're having any issues for an on-demand appointment. You don't have to have a scheduled appointment. I'll show you that number in a moment. Set your contribution rate. We targeted saving, around 15% between what you're contributing to the CalPERS pension, as well as maybe what you might want to target for the 403B. Even if you're starting small, that's completely fine. It's figuring out what you can do and building upon it. So maybe reevaluating that once a year and seeing if you can build upon it. Trust me, you won't regret it. And then picking out your investments. CSU has a great selection of investment options and different strategies if you want more of a hands-on or hands-off approach. And finally, making sure to add your beneficiaries. Please do not forget to add your beneficiaries. It's very important to do. We strategically, as I in the middle, because we don't want you to forget about that, but that's the final step of the enrollment process. All right, so I'm going to leave this up here for about 30 seconds or so. If you want to take a quick picture, one, we've got a phone number that you have to call on, and then there's the website. There's also an app. Fidelity has the Net Benefits app that you can use in order to one, monitor your account, make changes. It also has some great things to kind of see how maybe you compare to other individuals. But it's called the Fidelity Net Benefits app. There's two apps for Fidelity. Net Benefits is the one you want to use for your employer-sponsored plan. All right, so I'm going to leave this up here just for another 20 seconds or so. And then what we'll do is I'm going to show you, I'm going to pull up in the meantime, the site that we have at Fidelity to show you a little bit around that site, a few other resources. So now I'm going to share with you the site Julie shared a bit earlier. And the big thing that I don't want to spend too much time on this. I want to leave it open to some questions, but the big thing I want to highlight on this site, again, it's netbenefits.com/Cal State. And the big thing I would highlight are two things. One, plan and investments. Plan basics has some frequently asked questions. Investment options is where you can see a list of the CSU investment options. So you can actually see this without necessarily enrolling. There's the target date funds. Here's the non-target date funds. Some of them are just stock funds and bond funds if you want to build your own portfolio. It also has a little bit of an overview around the managed service that we provide, as well as brokerage link. Okay, so again, that's under plan and investments. And then we clicked on investment options. And then the final thing I'll highlight is two things, tools and resources. If you're looking for how it's going to affect your take-home pay, we got some calculators here, so tools and resources, and provide you with some education there. And then contact us. So this is if you wanted to schedule an appointment or to meet with us, you can click here and schedule a phone appointment or on-demand appointment right there. So that's the number dedicated for CSU employees. All right, so I'm going to turn it over to Bashoy. I think we've got some questions that we're going to answer. So me and Julie are going to answer those questions. Thank you so much for attending, everyone. And actually, that's about it, I think.
Thank you, Christian and Julie. Like you said, we had some questions come in while we were presenting. We'll try to cover as many as we can in the time that we have. And I'll start with one of the questions says, can I move my prior employer account into the CSU 403B?
That one, Bashoy. Yes, you, in most cases, as a participant in the 403B plan at CSU, are eligible to move a former retirement plan from a former employer into your CSU 403B. We would recommend that you would work with us, myself or Kristen, in doing that, and we would be happy to help you with that. Keep in mind that when you do a direct rollover, there's no taxes involved, no penalties involved. You're just moving it from one qualified account to another. So, but we're happy to help you with that. That's when we would suggest that you schedule an appointment for us to offer you additional advice and guidance.
Yeah, and maybe to add 2 quick notes there. One, try to gather a statement in advance, makes it a lot easier to help with the process. And 2, if you do have a CSU retirement plan from another vendor. So prior to Fidelity being the sole record keeper, there were TIAA and some various other vendors that you could have used. You can what we call transfer, or do what we call an exchange, where you just transfer the 403B assets in that plan to the 403B at Fidelity. So you can do that regardless of your age. So even if you're still actively employed. So you do have the ability to transfer and consolidate other 403B assets from other vendors.
Thank you, Julie and Christian. Another question says, I want to invest in socially responsible funds. Is there a way to do that within the CSU 403B?
I can take that one, Julie. So yes, you do have the ability to do so using what we described as the brokerage link feature. So if you have the CSU 403B, you contribute to that. You can open brokerage link. And if you open brokerage link, you can essentially shift money from the CSU 403B into the brokerage link. And then you get a lot more investment options. And yes, Fidelity definitely has that, whether you're thinking about, funds that, might be more socially responsible, investing in, companies that invest in women, or, companies that, are mindful of other various, factors that are important to you. Yes, there are funds that are available. If that's something that you're looking for, feel free to schedule some appointment with us. We have lots of resources that we can share with you around how to narrow down that criteria, because the big thing is brokerage link has lots of investment options. As I said, over 200 Fidelity funds, a couple thousand non-Fidelity funds that you can actually purchase into. We can show you around the site so you don't get too overwhelmed. So feel free to schedule some time to do so, but that would be using brokerage link.
All right, thank you. I know we went over this a little bit earlier, but someone is asking, how do I get started in enrolling in the 403B?
Yes, so the best way to get started in enrollment is to visit that site, netbenefits.com/CalState. And there is a big enroll button on that page, and I can actually pull it up real quickly again. But again, you would visit this website by going to netbenefits.com/CalState. And you would actually scroll down on the right-hand side to this button here that says Enroll Today. And by clicking on that, you would be prompted to set up an account, including a username and password. And then from there, the prompts would then help guide you along setting contributions, choosing your investments, naming beneficiaries as well. But you would do so by visiting this website first and then clicking on the Enroll Today button. And you can do this at any time throughout the year. Sometimes there's confusion that it can only be done during annual enrollment for other benefits. Not the case. You can enroll at any time throughout the year.
Awesome. Thank you, Julie. The next question we have says, if I am part of faculty early retirement program, can I contribute to the 403B plan? So that's the FERB.
Yeah, I'll take that one. So yes, you can. So for faculty that are FERPing, you have the ability to contribute to the CSU 403B. And I'll be honest, sometimes I've seen employees that don't start contributing, and sometimes they said they should have started earlier. But the reason they started is because they are FERPing, right? They're, maybe drawing on their pension, and ultimately then they have more and they're still working and teaching part-time, so they have more income than they need to. And so at that time, they are choosing to start enrolling then. So to defer some of their income, and be able to avoid the taxation, because your CalPERS pension is taxable, your Social Security is taxable. So, that along with working income can lead to a lot more income and potentially a lot more taxes. So at that time, that's when I sometimes see people do that. But yes, you can do it up to the IRS limit. If you're 50 or older, it's going to be $27,000.
Thank you, Christian. The next question is, how much can I contribute to the 403B, and are there other ways to save for retirement?
Yes, so Christian have gone over this throughout the presentation. There are some limits to be aware of in the Cal State University 403B. If you are below the age of 50, you can contribute up to what they call the 402G limit. That limit for 2022 is $20,500. Also, if you are age 50 and above, you are eligible for what's called the catch-up provision, the IRS catch-up of an additional $6,500. Therefore, you're able to contribute a total of $27,000. There is instances as well called the special catch-up provision to the 403B. This is for individuals who've been with Cal State at least 15 years or longer. And they are eligible to contribute total upwards of $15,000 over a 5-year period. You do have to go through benefits to see if you're eligible for that. So it is on a case-by-case basis. And if you're looking for an additional way to save above and beyond the 403B, keep in mind that you also can max out the IRS contribution limits in the 457B plan that is offered through Savings Plus.
Awesome. Thank you, Julie. The next question, I'll do maybe one or two more because we're running out of time fast. How are withdrawals processed when I retire? How much should I expect to receive? It's an open question.
Yeah. So we can discuss a little bit around withdrawals. First off, with the 403B, you're not required to take withdrawals until you reach the required minimum distribution age, which was pushed back a couple years ago to age 72. So at age 72, you're going to be required to take required minimum distributions once you've separated employment. So if you are still an active employee, even FERPing, you don't have to take distributions at that time. So it's only if you separate employment and you're 72, you have to take required minimum distributions. However, if you want to start withdrawals sooner to supplement your income, maybe you retired a little earlier, Social Security hasn't kicked in yet, you have your pension, you need a little more income, you can do that. CSU has multiple withdrawal investment options. They have, lump sum. You can set up what we call a systematic withdrawal payment, where you can pick a dollar amount, monthly, quarterly, annually. So you've got lots of flexibility. But what's very different about a 403B or a 401k is that there's no set amount that you'll receive. Social Security, there's a set amount depending on your age and how much you paid into it. The same holds true for the CalPERS pension. 403Bs and various other retirement accounts that I would say are similar, 401ks and IRAs and such, those are a bit different in the sense you can take out as much or as little as you want, but when the account's gone, it's gone, right? And if you say pre-tax, it will be taxable income the year you take the money out. So if you take out large amounts in 1 year, you're going to pay more in taxes potentially than if you split it up, and did more of a drawdown over a number of years. So you do have lots of flexibility when it comes to taking it out. You can schedule some time with Fidelity. Fidelity is, myself, Julie, and we even have local individuals in the branches that help out with creating retirement income for life and making sure that you're going to be able to get the money that you need and talking about safe withdrawal rates and such. So there's no set amount, but we can help you out with thinking about what's an appropriate amount based on your situation and goals.
Thank you, Christian. What is an IRA account, and should I be contributing to that?
An individual retirement account, just as it sounds, IRA, is an additional account that you can save into towards retirement, but it is not associated with your employer. So in this case, it would not be associated with Cal State. It's an account that you would open individually on or with any investment firm such as Fidelity. You could go to fidelity.com. Keep in mind that contributing to an IRA has different contribution limits as your employer-sponsored 403B. The maximum that you can contribute to an IRA if you're below age 50 is $6,000 a year. If you're 50 and above, it's $7,000. And an IRA does give you expanded investment options. You would just be using your investment firm's platform to get that money invested. But there are certain things and nuances to contemplate before you actually open and start funding an IRA. And we would suggest that you would schedule an appointment with one of us to discuss those options to see what would be the best benefit for you. But an IRA is an individual retirement account, additional way of saving towards retirement, not associated with your employer plan.
Thank you, Julie. And I guess we'll conclude because we're running out of time fast. Thank you so much, you guys, for the presentation, answering all the questions. If we didn't get to answer all your questions today, you can always book an appointment with Fidelity or one-on-one, or join the Ask Fidelity. And we're always we're appreciative of this presentation and Fidelity helping us with that. The next webinar is scheduled for March 16, and that's for all CSU employees. And the presentation will be standard, our voluntary life, voluntary disability, accident, death, and dismemberment insurance. All the webinars scheduled for 2022 should be on the screen. And thank you everybody for joining us. We wish you a great rest of the day.